All right, test 1, 2, 3, test 1, 2, 3. Unos, dos, tres, cuatro, cinco. All de trois, 4, 5, 6, 7, 8, 9, 10. Morning, everybody. Another opportunity to trade Forex. What day is it? I think it's Tuesday. I'm back on the East Coast. Hey, it's Tuesday, September 11th, 2018. So your daily Forex trading strategy session. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonald. It's nice to meet you. I'm the Chief FX Market Strategist for TradersWay.com. We are a boutique foreign exchange trading brokerage, and I'm here today to earn your loyalty and respect by sharing my, 15 years of technical and fundamental analysis experience, a little bit of trader psychology perhaps over the years. I'm here to help. The reason for it is we have a symbiotic relationship. If I can share my experience with you to help you grow as a technician, to grow as a trader, to develop conservative, disciplined trading skills with a focus on the long term. Maybe one day you will develop enough proper trading habits to become confident and perhaps one day trade real money, your money, maybe other people's money, who knows. And when you're at that stage, when you're ready to become a full-time Forex trader, perhaps you'll choose Traders Way as your prime broker. So please visit Traders Way, namaste. Please visit TradersWay.com and join our family, our trading family. We do these sessions every single day, Monday through Friday here at Forex.Today. Thank you, Forex.Today. I do these sessions every single day, 7:30 in the morning, Monday through Friday. We'll put together trade plans, huh? So let us be going now. So let me get the chat room on YouTube open. Just a reminder, if you're watching a video of this and you're like, man, how come I never get invited to these live webinars? Well, you need to subscribe to the Forex.Today channel. And what happens is when I click start, you get pinged. Ba-ding! Webinar is started, and it brings you directly to the webinar so you can chat and all that kind of stuff. So make sure you subscribe to the Forex.Today channel. And of course, during the live events, you can participate in the chat, ask questions, get involved, that kind of stuff. If you're watching a recording of this, please leave a comment, say hello. Say, hey man, thanks a lot. Let Traders Way, let YouTube know that you care about these webinars. Cool. So, what's going on, guys? What currency pairs do you want me to cover today? What's on your mind? Tell Uncle Wayne how I can help. While you do that, I'll start with gold and oil, and then we'll jump into the currencies. Probably dollar pairs, probably yen pairs, that kind of stuff. Can you do nat gas? Sure, man. Anything for you. By the way, I was in Napa Valley yesterday. In fact, yesterday. Man, what a nice place, huh? Had some fabulous wines. Very nice. It was very enjoyable. Okay, so I'm back in Georgia. This is crude oil. I'm crude and I'm brooding. I'm cruising, I'm bruising. Let's move this out of the way just to give you an idea. All right, so this is where we left our trade plan. This was probably Thursday of last week before non-farm payrolls. So not Friday, Thursday. It's Tuesday now. Okay, so we have this general theme I had to remind everybody. Because what happens is you get caught down here and you think it might fall forever. So you back out and you say, well, it could fall forever. It really could. But it seems to have been on an uptrend on a longer term basis. I could zoom out even more, right? This is where we're coming from. This is our history. This is where we're coming from. This is where we stopped, right? This is where we dropped. So that's our context. So you have to ask yourself, are you a bull or a bear? Cool. Well, if you are a bull, and you can see I have a bullish trade plan here, then you're looking for some sort of support. Now, on a monthly basis, this fat gray line is actually where you want to be long, right? So if you're planning out your monthly swing trade, well, Charles said, did I pick up any good wines? You know what? I had some really fabulous wine, and I didn't buy any to bring home. I didn't. I don't know. I just, I'm like, yeah, I'm supposed to be buying wine here. I think what it was is I just didn't have enough time. So being there for such a short period, I felt like, like I was buying hungry or something. It felt like I was desperate to buy. I don't buy that way, right? So I had this fabulous wine. My wife said, so you're going to get some? I'm like, well, I could. And then I'm like, nah. We'll try the next one and see if it's good. We get to the next one. That one's great, too. You going to get some? So anyways, no, I didn't buy any. All right, going back to this, anyone, let's say in the swing trading group, for example, would know that that's your buy area, the big fat line. In fact, you can see last week I highlighted it. We have a little mini. Remember this? I guess I really got to zoom in now. We had the mini buy plan into the micro buy plan into the macro buy plan, right? The double bottom, higher high, higher low breakout idea that fits within this macro move of just simply higher low, higher high, right? Because inside the higher low, higher high idea, you have double bottom at weekly target, at monthly entry, then some sort of price action. And then this is what actually happened. That's not too bad. It double bottomed, right? It came up, and well, so maybe this is the retracement now. I mean, you need to make your decisions on whether that's what happened or not, right? I couldn't quite tell you because I don't know, but it sort of fits in the same vein as this, right? Yeah, just the idea that it's going to step up. If you're a bull, this is your buy area, and now maybe this is higher high, higher low. Now, of course, all bulls would have preferred it not to pull back so far, but that's that. Charles always buys too much. Yeah, that was just the thing. I was there. I went to a party at the Los Altos Country Club, one night, and that was great. And then the next morning left very early to Napa. So I was doing a few different things. But it wasn't a vacation in Napa, right? So if I had spent a week in Napa, yeah, I would have bought several cases or something. But just popping into the wine, like you have a glass, you're like, that's fabulous. I'll buy a case. I don't know. No, I didn't do it. I was there. That was what I was supposed to be doing. I just didn't do it. Felt desperate. I should have had like 3 or 4 days tasting, then gone back to my top 3 or 4 favorites that I had over that course of time, gone back and retried them, and then bought. I just felt forced. So anyways, going back to this, boom, 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 right? Right? So is that where we are? No. Well, and then are you guys watching oil inventories and stuff? That's becoming more and more of... Joe says, aren't the wineries burned down? That was more Sonoma. Yeah, isn't there a hurricane coming? Florence. Well, I've been on the West Coast for a bit, so I'm not up to date on that. I'm looking out my window now. It's absolutely beautiful. The sun is rising. The sky is sort of pinkish and bluish. The water is pink and bluish. Everything's calm here. The azaleas are not flowing, like that stuff. Seems fine here, but I believe it's off the coast. So I'm like, how far am I from Savannah? 3 hours? 3.5 hours from Savannah. So I think if it's coming in there, it's going to come in like north of Savannah, probably North Carolina or something. But honestly, I don't even know. I know millions of people have moved out. They're probably coming toward Atlanta. Who knows? But I need to update myself on that. But here's the thing. It might cause a lot of evacuations, damage, all that kind of stuff. But is it going to damage the oil crop or the orange crops in Florida? I don't know, but I don't think so. I think it's coming in much farther north, right? Remember I said if it's above Cuba, you buy frozen concentrated orange juice. I think I talked about this at Non-Farm Payrolls on Friday. Right? If it comes in below Cuba, you might want to buy oil futures, right? But I think it came out like Bermuda, and I don't know, like Bermuda is so unbelievably far north, it's nowhere near the Caribbean. So if it's way up there, running into North Carolina, the only thing I could conceive of buying would be if it hits land, if there's destruction, if it destroys houses and all that kind of stuff. Then I would recommend you look at like Home Depot and Lowe's stock, because homeowners are going to have to clean up and repair their houses. So a lot of people are going to go to Home Depot. But we're not talking entire, commodity crops or something, right? All right, yeah. So South and North Carolina Thursday. All right. So yeah. So So there you go. That's nowhere near Florida. That's nowhere near the Gulf of Mexico. That's nowhere near all the oil in Houston, Louisiana. Right. So, anyways, but that means it's on the way here. All right. I'll be safe though. Don't worry about me. This is the energy complex. It has been requested that we look at nat gas. Okay. Just go about my day here. Paradise. Wonder if I can grab that over there. Yeah, perfect. All right. Now I'm looking at this, and it's been very bearish. It's still below this. So as long as it's below the gray area, it's bearish. Don't get me wrong, it's bearish. You see how we breached this 21 though? That's very not as good. Okay. Let me sort of throw out a guesstimate. If I was an Elliott wave person, I'd probably look for a 3-wave correction here. Or take it even further, maybe a double bottom. Let's not make it that far. Let's put it here. So it's not even really a proper 3-wave correction, but okay, so I would almost assume that it drops into consolidation. Okay. Oh, sorry, to finish my thought on oil before I got distracted on the hurricane stuff. I believe oil, I believe Americans are producing a lot of oil again. Right. See, Saudi Arabia could say, we produce more oil. And then they say, we produce less oil. United States, you can do it. Every individual oil producer can do whatever they want. It's a democracy, baby. So anyways, it's much more difficult to control. In fact, In my oil class a few years ago, when I studied the history of oil globally for 200 years of oil history, there's this great picture of a particular region of Texas. I don't think it's West Texas. I think it's called something else, and the name is eluding me here. But it goes back to, I don't know, the 1800s. And there are so many oil wells that they're basically, each leg of these structures are basically touching each other. There's like, in the photo, there's 10,000 of them, just one next to another, next to another, next to another. They're all producing oil. Oil's all over the ground. And what happened was so much oil was produced that oil prices collapsed to the point that the United States government sent troops there and forced oil producers to stop producing. Right? Because there was oversupply, collapsing prices, but the industry is incentivized to cheat, right? So like, if everyone around you stops producing oil and demand stays the same, then prices are going to go up, and you could cheat and start selling your oil even though everyone else isn't. But this is the problem with OPEC, right? Where everyone agrees, like, yes, we will cut back supply to increase prices. And then they're looking around, Russia cheats, right? Iran cheats. All of a sudden, and then if you know the other guys are cheating, then you produce too, because you don't want to be cut out of the market, and all of a sudden everybody's cheating again. And it doesn't work because, Iran, Russia, Venezuela, they'll just produce anyways, right? So everyone says, yeah, we'll cut, and then of course everyone produces. Well, that's kind of happening back in the United States. So anyways, the army was sent out. And they said, and imagine this in America, right? If you don't shut that off, I will shoot you dead. Okay, I'll shut it off. And the prices eventually rebound. But, there was a call for some sort of governmental intervention to manage oil supply. But anyways, oil supply is going up. Frack it, baby. All right, so you're thinking 275 for down? Well, isn't that where we are now? But every time she closes her eyes. Where's that thing to turn price on? Anyways, so what I'm thinking is, like let's look at the facts and not opinion, right? We're near a, let's maybe get rid of this one. All right, we're near an M2 down here. So buyers already bought this, right? That's that. Buyers already bought that. Is this an uptrend? Yeah, it's not an uptrend. Where would buyers start to buy? Well, this fat gray line. It's only S1 though. A lot of people get hung up on that, like it's support. That's the support pivot. Yeah, but it's not an entry unless you're range bound. Now the next one below that is weekly. It's weekly M2. That's a buy zone. So there is support there. And then you look left. Sure enough, you can call it like a bottom, right? Range bottom type stuff. All right, so that's not a good area to add new shorts. But has the market turned bullish? Doesn't seem like it. If anything, what will happen is we'll consolidate, right? It'll move down and then kind of move sideways down here. So if you're trying to get a longer term move here, as long as you're below this gray area, you have permission to stay bearish, right? So a bear should have it kind of set up this way, right? Down to support, up to the roll reversal. That's what this gray area is the new short, right down here. So as long as you're below this gray line, you're thinking up and then back down, right? This is what let's move this. You know, a bear is thinking this. Now in this time frame though, because the 55 gets in control, that's why I put it as a double bottom. Okay, because the 55 predicts the double bottom. But you'd be amazed how often you can get lucky trading in the direction of the prevailing trend, right? So if this is supposed to be heading down, okay? And wasn't there a time when we were up here that we discussed that there was a potential for a downward move in nat gas because of a potential upward move in crude oil? I think it was, but that was 3 weeks ago. I think we talked about that. I don't see it here, but I believe there were monthly pivots up there. Okay. I guess one other thing to add, if you sold up in here, which is going back, 2 weeks now. 2 weeks ago, this was a sell zone, right? So this down, up, definitely a sell zone on a monthly basis. And your target would be down in here, okay? Right? So if you're a bear, what you're going to do is fold in the weekly trade plan, which is here. So you could be short now, okay? Because that's a weekly basis. The monthly basis, you were short up here. Both of which now that you'll see there's a cluster of support, which is a target if you're a bear. Now I'm having trouble zooming in, so I'll go into a 1 hour chart, try to get it. Okay, there's a cluster of weekly and monthly. So that's 170. Not 175, but 170. Okay, yeah. So you should be able, if you're going to risk like hanging out up here, staying short, then you got to go for the reward, right? If you don't think that's possible, well, then make your decision up here. But if that's where you're going and you short it up here, right? Fine. So remember the weekly short zone, just to highlight that, right? That's the weekly short zone. This is where the monthlies would have sold up in here. This is where this week's bears would have sold, and that's the target for both. All right. I'm cruising out, bruising out, I'm never losing. I'm in my car going fast, and this is what I'm doing. Around the way is where I'm from, and I'm from Manhattan and another bum. All right. Aussie yen. What? Okay, got our step lower. Look at the target. Look at that, huh? Killer. So this is last week's swing. Look, lower low, lower high, lower low. Look, it missed it. Like I don't know why I did that, but I'm not actually touching the target. And this one didn't actually quite get there. Interesting. So the plan last week would have been, hey, maybe this thing could rally up into here and then come down. Kenny says, so should I hold it or take profit? Well, I don't know. That's between you, your clients, your tax attorney, and God. But not me. Do you hold it or take profit? I don't know. Not my decision. Wasn't my trade plan either. I don't know why you got in. Yep. But that's a serious thing where you should, that's where your risk management is. So, for example, make a decision now, write it down in your notes. You decide to do one thing or the other, and then follow the trade, after you made your decision. And then on Saturday, several days from now, take a look at what happened the rest of the week. Are you happy with your decision? Was the other decision better? Like, did you make a mistake? I mean, you can't make a mistake taking profit, right? But should you have let it run further? Did it run further? Did it not run further? What was the evidence that you had in the moment to make that decision? What actually happened? Why do you think it happened that way? Fundamentally, why did it happen that way technically? So if it continued to fall but you took profit, was it because it retraced back to resistance and then got the second move? Well, what did you learn from that? I mean, take all these notes. I have to remind you, everyone here, that if you just sit and trade day after day after day after day after day, you will not likely get very much better. Maybe you get a little better, maybe you get a little worse, because you're not consciously focusing on very specific things to improve. So by and large, what you're doing is randomness over and over and over and over. And then from that randomness, you're trying to discern some sort of pattern in your trading. But if everything's random, how could you, predict, understand your strengths and weaknesses, right? So to differ, you really should be studying as a trader, not just trading a lot. So like in that case, do you get out in this situation or not get out? Well, that's a great question. You should write an 8-page essay, right, and provide evidence to support your argument. What is your thesis in this situation, right? I preach to teach, right? Well, what are you teaching yourself? You should be able to say, well, I've been in this situation before, right? And my thesis is, as long as you're below support, it's still bearish. If your methodology or your experience, let's say, tells you that you should let your winners run as much as possible, then what you're risking is opportunity cost if you're already profitable, if you already got your stop at break even. So you say, well, my stop's at break even, or maybe I have a small profit locked in, and price is already still below support, so support's now become resistance, and you're going to try to let it run because over the course of a year, those moves are what's important, right? You're not really risking much anymore, but you have the opportunity, so you want to see it out. Great. Well, how do you know that? Well, you've done this, 25, 30, 40 times before, and you've documented it, and yeah, right? Remember, one day, if you want to become a professional, you need to speak with a voice of experience, where you can say, I know what to do in this situation. I have studied it. You personally know your strengths and weaknesses, and you can speak as an expert. Again, just because you've randomly traded for 5 or 6 years, if you don't have a teachable methodology, then by definition, I'd say you were not that expert. Okay. Anyways, so Aussie yen here, looking at this, seems very bearish still, right? We discussed last week, if you're a bull, this is where it would rise, right? But then it dropped pre non-farm payrolls. Didn't do much at non-farm payrolls, right? So we're just down at monthly support, which is not favorable. It's not what I would want for me if I was trading this, but because I was hoping that this would turn bullish. But remember, hope's not a strategy, right? Looking back, we have, right, this was a higher high up here. So higher high, higher low, lower low, lower high, lower low, lower high. Remember doing all this? Right, lower low, lower high, 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 higher low. Whoop! Right? So you just let it do the higher high, higher low stuff. We were hoping, or let's say at least I was hoping, this inverse head and shoulders, which we talked about up here, would drop down, produce the reversal, essentially create the higher high, which would then set up the higher low, which would then give you the 3-wave, extension or expansion wave, whatever, the higher high, and it's set up beautifully. This was our short-term conservative target because of the roll reversal, and sure enough, it collapsed. Why? Well, as we discussed even back here, that's where bears live. Pretty simple, right? I was hoping it would break out. Well, hope's not a strategy. Yeah, started a journal. Well, revisit my. You potentially have bought my book from a million years ago, and I'd say at least 1/3, or maybe almost half. No, not half, but 1/3 of that book is dedicated to starting and using and managing your trade journal properly. Because most people do their journals in ways that are really not that helpful. So if you're going to do the journal, which is great, make sure you revisit that part of the book. All right, because it's basically muscle memory for your brain. Okay, so anyways, that's not good for macroeconomics, right? That's not helpful. Oil down is not helpful for macroeconomics, right? Things don't seem as awesome as I would like them to be. Okay. We're heading down here on euro dollar. Once again, it's not something that I want. It's not even doing it well. So I think I'm going to stay out of this until I can get it. I'm going to I feel like it's lying to me. Okay, let's say it that way. I feel like it's lying to me. And it's not actually falling. So I think between this line and this line, right, it's weekly S1, monthly central, this whole gray area that I had outlined before. I think that's what's really going on. Now, I thought it was going to wimp out on us up here, as you can see I drew last week. I thought it'd wimp out here. It wimped out here, which is even wimpier than I would have thought. So I think it's lying to me. Because the other thing is, I believe it. I want it to go up. So I'm going to treat it like it's just moving sideways. Now, a bear is going to disagree with me, right? What is a bear going to say? Lower low, lower high, lower low. Okay? And I know how to survive when I'm wrong. Because if it ain't going to go up down here, it's going to go up down here. And eventually, if it ain't going up, it'll be plainly, horribly obvious. So I think this is what, excuse me, I think this is what's going on now. Okay? So I kind of want it to go up soon here or up here. If it's anything below this, forget it. I'm out. I'll take a walk. Because then it's going to play off this, or even more likely, I'm just wrong and I don't want to be in that space, or at least I don't want to jump in and start selling because then I lack discipline. So if it ain't going up, if it's deciding to go down here, I need to at least back up, try to figure out why I was wrong, spend some time in a corner crying, and then come back with a new trade plan, right? But you see, I want it to go up here. So it's still a valid plan. If we drop this week all the way down here, which is what, 114.5, it still can do this. Okay? If it's not going to do that, then the next plan is up from there. And that's a jagged little pill. I'm not ready to swallow that. Still valid. It's too much effort. Because you can then consolidate before the move up and all that kind of stuff, right? I'm looking for a nice breakout. And that's why I have this gray area zone highlighted. Like, I don't even want it to come down to the M2. I mean, I kind of want the monthly central to hold, right? I don't mind dropping back to the monthly. that's fine by me, because then I could at least play it as a range, and then the range breaks and we head to the up. That's just easier. Okay. And of course, if it doesn't do that, then I have to ask myself, am I the only bull on the planet? And it could be, right? Because everyone will argue like, oh, well, interest rates going up, the interest rate differential makes the dollar stronger. I'm like, okay, that's very, seventh grade. Yeah, but I can't argue it. I can't say that it's wrong. Or to say worse, to say differently, if I got it wrong, trading wise, people could easily point to the interest rate differential, and it'd be hard for me to argue. So it just makes me look bad. So might as well be cautious in this situation, right? Richie says, when I make money, can I take you to dinner? Yeah, maybe. Yeah, that's a for sure maybe, Richie. I like to eat. So WTI, I guess we should do gold now. Oh my God, 2 giant deer just walked past the window. Hello, sweetie. Cool. Gold. Okay, let's zoom in a little bit. This is a 15-minute chart. Okay, so you can see here I have a short set up here. Down, 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 up, up, sell the sweet spot. That was set up on Friday. You can see the sweet spot was based on this pivot, which is actually held, right? You can see sweet spot here. In fact, if I can grab that gray zone, there we go. Okay, right? Not bad. I have it based on the 50%. I mean, it's not bad, right? And that just gets us down to here, which is, what is that, 1188? That gets us down to 1188, and then maybe it heads back up from there, is what I have. Right, so the short was at 1197, so $5 above us. We got it in perfect. So 1197, almost 1198 actually. 1198 with a target of 1188, so $10. It's a $10 move, and we're $6 into the $10 move. Cool. Right? It's cool. It's plausible. Boop, 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 boop. Boop, 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 boop. Oh, I guess do pig dollar. Do you guys like pig dollar? So here I have breakout pullback. It pulled back further than I wanted, or not wanted, but I used price action. Okay, but you can see all it did was a 50% based on that move, which is fine. But nonetheless, we have this idea of higher high, higher low, higher high, higher low, higher high. So instead of kicking off this top, which is roll reversal, it did it here. It's not pretty, okay? But nonetheless, it did not make a lower low, so it should make a higher high, which it now has done. It's getting caught up on the resistance that we identified last week. So it's just kind of doing its thing. And like we did over and over and over, old resistance will probably become support. So if you're still a bull, now we missed the price target by 2 shakes of the lamb's tail, and these are big pullbacks. So I used to play around with this idea of frequency, and then I realized there's another definition of frequency that other people use, and it has nothing to do with mine. It's because I'm self-taught, right? So after teaching myself Fibonacci for, I don't know, 2 or 3 years, one of the things I got obsessed with, well, obsessed isn't the right. One thing I studied and watched for quite closely was this idea of, let me back out. Maybe that none of this analysis even matters. Oops. Yeah, I'm just going to kill all this. Let's just redo it. Okay. Let's left all that there. Anyways, let's do it this way. I would look at a Fibonacci retracement, and I would look and ask myself, is it a 382? Is it 50%? Is it a 618? Is it a 786? Is it a 21.4? Right? All these things. And I'd look at it, and then I would see what happens next on the next move. The first one might have been, let's say, a 382. The second one might have been a 50%, right? The third one might be a 618, right? This last one could be like a 786, right? And the next one would be a reversal. Okay, that's the general pattern I would look for. Okay? Oops. And I called that frequency in the same way that you'd use an oscillator to measure sound. Okay? Your oscillators do this over and over and over. Peak to valley, but sometimes measuring it this way, instead of vertically like I just used price time, when you're measuring sounds with an oscillator, you're looking at peak to valley height, and you're looking from valley to valley or peak to peak width. So like this would make one note, right? Like maybe a high note. Actually, it'd be tighter, right? It'd be smaller at the same time, wouldn't it? Okay, like that might be a high note. Right? So you would measure, you'd look at like these peaks, the valley to valley, peak to peak, the peak to valley, you measure it all that way. And then this would have a much lower sound, right? If you're using oscillators, right? So by thinking of it that way, basically what I was doing is I was turning the chart from vertically to horizontally. And I'd say, okay, the frequency tells me a lot of information, and I can almost hear it, right? Whoa, oh. I looked at this and I said, okay, well, this is a 382, and this is a 50%, and this is a 618, and this is a 786, and then this is a break. It changed sort of the sound, so I looked at it as frequency. That's why I called it frequency for a while, because I didn't know there were other people doing, I don't know what, when people talk about frequency, I don't know what they're talking about, but this is what I was talking about at the time I was kind of studying it. And I looked at like if the market was speeding up or slowing down, sort of like, is the note fast or is it low? Is it high or is it low, right? If, as in this case, in this example, it was a 382 to 50% to 618. Each pullback was a bigger and bigger pullback, which in that definition of frequency, the frequency was getting lower and lower. In an oscillator, it'd be wider and wider and wider, lower and lower, lower note. Price and time were slowing down more and more and more. The upward move is slowing down more and more, and here to the point of actually collapse and reversal. Right? So let's clear that out. So that tells me whether the current market conditions are speeding up or slowing down, right? So that's kind of where you could be watching these types of moves. How big are the pullbacks relative to the other one? Is the market speeding up? Is it slowing down? What is the frequency, right? And so sometimes I get into measuring stuff like that. No, this just might be step ups or step downs and stuff like that. Oops. Let's move over to yens. Okay. First thing I look for is correlation. Make sure everyone's on the same time frame. Okay. Trying to head up, but it's actually sideways in a down market. Oops, trying to get this one here. Sideways in a, right? So the sad thing is, and I think we talked about this a lot last week, many of these yen pairs were at points where you really wanted it to go up. Like exact prices. If they were there, you really need them to go up if this is going to be bullish. And well, many of them have failed. Right? The only thing that seems to have held was USD yen. And I suppose in this case, pound yen is performed quite well. CAD yen, not quite as much. So let's take a look at that. Okay, we wanted this price here to be our line in the sand. I think I called it an Alamo. You know, it dropped all the way down to basically S1, right? That is not favorable. It's not destructive to like it kills everything. But this was really important. So now I lose confidence. It hasn't reversed to the downside, right? You wouldn't call that a downtrend, but it could form, and especially up here, right? And we're kind of where we are now. It could certainly form to a lower low. You could almost treat this like a bearish engulfing candle on a daily chart. Let's see, or weekly chart, I suppose it would be. Okay. It's not even that. So it's disappointing to a bull. So I kind of have to do my job here and say, well, this is still a buy, and so is that, and so is that, and so is this. But it's tiresome. Right? It was supposed to do better than this, and it didn't. It had a chance to do better than that, and it didn't. Right? It's sort of like a relative that you were expecting to kind of get their act together, and you did everything you could to help them get their act together, and then they fail you again, and you're like, oh man, totally blew it, right? Here you are. It was supposed to go up quite a while ago. This was supposed to hold, as you can see, up, down, up. So yes, it's a double bottom, but this was a big bear move. The bears did really well here. It certainly wasn't unpredictable. Notice it fell at exactly the price a bear would want it to fall. So if anything, I mean, this was a beautiful trade, except I wouldn't have been the bear, which is very unfortunate. My hypothesis was denied by analysis of the market. Right? So a bear now probably shouldn't be selling. and a bull is going to sit around buying or waiting to buy. This, because we're kicking off the 4-hour 21, it's very bearish. I'd be very, very careful as a bull because bears know they're pretty close to the support and they don't give a damn. They're selling off the 21. They're confident, they're aggressive, and they're supposed to be. You're supposed to be confident and aggressive off of 21. So they are. They're like, yeah, that's last week's target. Got it. Oh, yeah, there's support over there. Yeah, got it. Sell. They don't care. They're pretty confident to the downside. And that's disconcerting if you're a bull. So, be cautious. Remember, always remind yourself, too, in these things, if you think like the Kiwi yen, for example, is going to go up between now and the end of the year, you don't have to be the first one in on this, right? Let it reverse before you get in is one strategy. Let someone else do the heavy lifting. Right, Aussie yen we've already done. USD Mexican peso doesn't matter. Go to this one. Okay. Let's see, get rid of this. All right. So as you can see, it's the only one that's bullish. If we were using this to measure downward moves, this confirms the upward break of the slope, right? So now this trade plan here is what you'd be looking for. The higher high, higher low. Okay. I was hoping to get that upward move here, but it double bottomed or triple bottomed or went consolidated at the bottom once again. Okay. And then up, down, up, down. This was the buy zone on Monday. If you were a bull, the target is the red area, which we've hit. So here it is Tuesday, and we're already done. So that's the disappointing part, right? Because now, what would a bear do? They're going to sell that hard. Why? Because bulls are supposed to get out. And if you're already a bear, so this is kind of like done. If you're a bull. And a bear, again, I think you would have got that. That's pretty obvious of a sell. So I don't know what's left, right? And so here we are on Tuesday. I'm like, yeah, well, you could have bought it Friday. Could have bought it Monday. It's Tuesday. Should have already taken profit. You had your chance pre-London, right? Yeah. Luis Garcia says it's the only one that hasn't cheated on you. Yeah, there you go. It's not like she doesn't. It's not like she loves you the most. She's the one that lacks the most confidence. I had a boss once tell me, no matter how ugly you are, there'll always be a woman desperate enough to marry you. Like, why are you telling this to me? Yeah, I guess that's it. I think that's it. Any requests? If you have a request, please let me know. Oh, pound odd. Sure. You like the crosses, huh? You like the cross? Okay. So, I would imagine you already know we're at resistance, but then it makes it difficult for me to, like, I don't know what else to tell you. I don't want to grab it. No, I didn't. The click meeting wouldn't let me download it. And to be honest with you, since I did the webinar at 4:30 in the morning, you know, I didn't feel like messing around with it at 5:30, and I had to get going. So, all right. All right. Chawla is short here. So you just shorted it now? Yeah, it's a counter trend trade. It's Tuesday. You got the weekly move here, and you got the monthly move there. Yeah, it's one of these things, like, you could totally do it. You have the technical right to do it. It's probably not terribly a good thing to be doing, but what you've done is technically valid. So it's okay, right? But the reason I don't like it is, you know, you're selling a rally, but it is consolidation and such. Okay, so it's all right. I'm not in love with it, but everything technically is correct. But it's like trying to catch a falling knife. In this case, it's the opposite of that, but I think, you know, I think you get it. Yeah. See, in this situation, you should be a buyer. So, like, in the swing trading group, if we had analyzed this trade, you know, I would have said on the, you know, before we got there, right? Because that's the whole point of front running, is that this would be a sell and this would be a buy. Okay. And of course, selling in an uptrend is dangerous, but if you just had to be a bear, you know, on the first of the month, that's pretty predictable, right? And this is very predictable. So I'd rather you say up, 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 down, down, buy, up, 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 down, down, buy, right? And just rinse and repeat. Because, you know, look at this, like this is a buy zone, right? Anyone in my swing trading group knows that. That's a buy. This is your target that week. Okay. Then this is a buy. This was the predicted target for that week. Okay. Now it went further, but it doesn't often happen that way. Go to the next week here. This is a buy. This was the target. Right? Like, you see this? Like, you see how predictable these moves are? So yes, you can sell up here. And if that's all you, you know, if you're watching this closely, I suppose you'd be well on this, in the sense that it's overbought, it's too high, it went too far too fast. Bulls are going to look to take profit, you know, and all that kind of stuff. I still would probably be selling a few pips above you if I was a bear. Up here, right? 84 and a quarter. We're only at 83. Like, you're a bit early for me, but I get it, because if you look left, there's a lot. But on the long run, what I want you to be doing is buy here, take profit, buy here, take profit, buy here, take profit. So, but if you're taking profit here, you're doing the right thing based on last week's bullish move. So you're on the, you might make money, but you're on the wrong side of the trade, right? Like this person made money. This person made money. Now you're that person, right? You're taking the counter move. Technically, it's perfectly fine. And in this case, in fact, I'd say in this case, you're better off than this trade or this trade, this counter trend trade, this counter trend trade. But still, I'd like it to go up a little more, become a little more overbought, and then collapse into counter. So you might have a decent trade, and you might be early, or it might come down, and then you just counter. So I don't know. It's fine. You're technically fine. I think it could be a little bit better. But you have enough to argue. Well, counter trend scalps are, yeah, I guess it doesn't agree with the idea of let your winners run or trading in the direction of the trend, right? Like, you see what I mean? Like, so now if you're finding mediocre trades, oops, I guess I got to be over here. Now you're setting yourself up for mediocre trades with higher risk and no potential for big reward. It's kind of like if you'd missed this buy entry or this buy entry or this buy entry or this buy entry, right? That kind of stuff. Then scalping up in the direction of the prevailing trend, you're buying late, but you're still buying. That's how I'd rather you be scalping than finding a good, healthy uptrend that has been working for 5 or 6 weeks in a row and you're shorting over and over and over again. It's not kind of, you can do it, make money, but it's not really what I'm preaching. But you're not, but there's nothing there wrong. If I were to do it though, I'd rather sell it up here. Just, if I had to, like, I'm not trying to talk you out of it. I'm just saying, nah, I would rather sell it at 84.25 to 85. If I was going to counter trend, I would have waited a little bit longer. I'd be up here. Okay. How does one join the swing trading group? Well, first thing you have to do is pass or complete the swing trading course. So I only invite people that have finished the course. Because the live group isn't really training. We just get together and set up trades. But if you ask me, like, what is this or what is that or how do you do this? Like, no, that's not what the group's for. You have like 30 hours of videos. You can go back. Anyways. USD CAD. Kev, I thought we did that. Didn't we do that? I'm pretty sure we did that one. Any other last requests? USD ZAR. Oh, no, it's all right, Kevin. It's just, I can't redo it again if there's 100 people who already saw it. But just review the video is all I'm saying. Yeah, ZAR is getting crushed. Okay, so it's kicking off an R pivot, but remember, that's not an important pivot to me. So being rejected at R doesn't mean reversal. So I'm watching this area, I think is much more important, and probably another opportunity to sell the Rand. Okay. So we're probably on our way to 120 is what I'm thinking. What about you guys? Or sorry, 20, not 120, but 20 to 1. right? So here's, for me, it seems like the all-time low is what, almost 18, right? So maybe that is the all-time low, but it seems like things could get worse. Okay, but going technically now, let's go back. This is an R pivot, right? It's going to act as resistance. My assumption at this point, my hypothesis, is that we stay above this M3, and we're on our way to the monthly target, which is currently 16-ish. Okay. That's kind of where I'm at. I don't really want it to go lower than it is right now, so maybe, if anything, it's setting up for a buying opportunity. Okay. It's funny, there's always one person that logs in. I don't know if it's the same person over and over again. They just don't like the webinars, so they thumb it down. It's interesting. I wonder the psychology of that, right? Like, how interesting. Euro Kiwi, Euro Aussie. You know what? Let's save those for tomorrow, huh? Can we do that tomorrow, Jack? Yeah, Kenny's not loving the whole 120 idea. Yeah, well, fix your government. Yeah, there's always one, right? It's funny. No, but the psychology of it is just very interesting. So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you for your patience with me yesterday, doing the analysis from hotels and 4 o'clock in the morning kind of stuff. But that's normal if you're a currency trader and traveling. But anyways, I appreciate your patience. Thank you for being a client to Traders Way. Thank you for subscribing at YouTube and all that kind of stuff. Thank you for trying every single day to be your best and treating these webinars as a professional event. I really like the professionalism that you show. And I look forward to this hour together. I do. I look forward to it. It's probably the best hour of my day. But with no further ado, I'll see you tomorrow. Right? May the Forex be with you. Cheers.